Let's get in our next corporate on the show. The management at Satin Credit Care is now joining us. Mr. H.P. Singh is with us. Care has upgraded the credit rating of the company. Let's welcome in the management at this point of time. So congratulations on the rating upgrade from Care. Will this translate into a lower cost of funding for the company?
So definitely yes, and a rating upgrade does definitely involve the cost of funds percentage basis going down. How much will it go down? I think it will be very hard to tell right now, but definitely I think the range would probably be in 0.25 basis point to about 0.5 basis point. Definitely that is what we are really looking at in terms of our reduction of in cost of funds. Definitely yes, there is going to be some a drop in the cost of funds for us.
What will be the margin impact? How will you pass on this lower cost of funding, and hence do you see yields coming down?
See, it doesn't have a margin impact on us because as per our norms with RBI, we are supposed to take a 10% margin. So there's no difference in the margin impact for us. The lower cost of funds will definitely be a boon for our borrowers because it will be passed on straight away to our borrowers across. So this will be bringing our rates to the ultimate borrower down by about 0.25, 0.5. In fact, we've reduced in this quarter our lending rates by about 0.25 basis points. So definitely yes, this rating upgrade will also lead to a reduction in our lending cost to the borrowers as such.
How do you see the borrowing mix changing post this rating upgrade?
My own sense is I think, the borrowing mix definitely does not go for a very major change. The only thing which will probably be there that probably we'll have more of mutual funds and insurance companies looking at lending into us, which probably was a big constraint when we were at a rating of BBB+. Moving into the A category, being, having A minus stable, I think will definitely open up more vistas for us in terms of the domestic mutual funds as well as the insurance companies lending out to us.
The impact of transition to INDAS on the asset quality of the company?
The NDS is being implemented for NBFCI, but I think maybe it will be a short-term implication on probably the PNL. But my own sense is in the long-term implication, it'll remain, it'll be all okay. Maybe the first 2 quarters will have some little impact in terms of our debits to the PNL. I think but beyond that, I think it'll probably settle down and it'll be all even thing.
We saw AUM growth of about 40% the previous year. Do you think in FY19 that growth is possible?
We've given a guidance for our AUM growth, which is 40% plus, which we've given. I think we are on track to it. And hopefully, I think we'll be able to overachieve our revenue guidance in which we've given.
Right. Asset quality stress came down in Q4. How do you see it shaping up ahead?
So we've been stable in our collection efficiency for the last 2-3 quarters now. Our collection efficiency stands at 98% even now. Our own sense is the net NPAs will probably be stable now for a couple of quarters before they start even coming down. In fact, we are looking at bringing them down even from this quarter onwards. So my own sense is I think the gross NPAs and the net NPAs, which was last year as such, I think it will definitely be a marked improvement from there.
You recently raised capital. Are you looking at any acquisition in the microfinance space?
No inorganic growth plans. I think we have sufficient capital for us to fund our growth for this year. And we are looking at funding that and meet our guidance which we've already given.
Thanks so much for taking out time for us. Always good to get perspective from you.